Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro. Look at this thing making a pretty nice run. I see Olivier has looks like he's covered a euro long for 70 pips. We've had a pretty good. Obviously, the big move also in the cable. If you're with us in the early part of the what even Asian? It was early Asia when we saw this move here in cable. So obviously, a pretty big move here. We do have a key area here that we're looking at that's kept it in check, at least for now, which is this 3273 area here, at least like on the daily. But yesterday, I was looking for a move, 3194 here. I mean, late in the day, we were talking to some people, and it was making this bump up in here. I thought we'd make this move to 3194. And it actually fell a little bit short. It fell short of that, and it's peering back. And once we got into the new session for the new day, it started pushing up. And I was looking to sell against here, and I told the guys, I think it's going to go on and take out. It's not going to be happy now with 31.94. It's got to hit those stops at 32. But there's no way I thought it was going to zoom up like this. And a couple of us got short up here against this 78%. I didn't even hang on for that long. I was afraid of getting whacked with these Brexit lines. But they had a nice rebound back here, pull back. And we were talking about being a little bit careful because we came back and tested the 32 and then continued work right back higher again. And we're still staying up very well here in the cable. Also, obviously, the euro has gone and come back here. It certainly looks like it would still be open, initially, to going down here. But I guess this big test of the 61% of that major area from 346 to 2557 really allowed the euro to come back. And, one of the things with the dollars, we talked about this yesterday, as soon as it looks like it's going to break out, it comes back in. Just by the time it looks like, okay, now it's going to fade, it comes back up. So it doesn't surprise me that the dollar has paired back. And we were looking for our bias chart support didn't even come in. Remember, the euro was still holding steady yesterday, and our bias chart was down here at sheet 9703. So we did make it there and even a little bit further, because you can see right here. But I thought we'd pair back because, once again, when we looked at the dollar yesterday, if you remember correctly, we talked about this being really huge weekly resistance up in here on the dollar. Look at that. I mean, huge. 97.89, also confluencing with the 61% of the move back from 88.29 to 103.83. So, and one of the things we also pointed out was that it didn't close. Remember, we pointed that out yesterday. It didn't take out this weekly close in here. And I thought that was important. If it had got beyond that, it could have given it even more upside momentum. So it paired back, but I didn't think it was. It has paired back a little bit, still way up there, pretty high, but we were looking for a bias chart pullback and then some support at 97.03. So we late in the day, it took a while before we got there, and but we finally did make that move down there. Let's move this back to the daily. You can see it's just been a continuous drip. There hasn't been like one particular thing you look at and say, wow, there was a true reversal. There, other than, on Friday, a little bit of a tweezer top here, and then it's some key, close to a key resistance. But we've come down here towards this 96.92. One of the pairs pretty interesting here was also on the dollar peso, which I traded a little bit yesterday. I'm still relatively new with the peso, but we got this pretty good little pullback, and we dropped down to that 1942-ish, and then dropped back here. I actually got long, then added, and then I got lucky. I was able to go on and get out, but I think this is a good area here, this 1937-ish. I was wondering if it was going to make it down there. Now it has, but it's just trading very, very quiet. But remember, this was a very key area here on the daily chart when we looked at that. See right here at the 1960, and that actually confluence. Look at that key, very key area. Look at that on the way up. We blasted. We talked about that yesterday. Come back down for support. Then you got a little bit of a battlefield here. So I guess it makes sense. Although I didn't even see that on the way up, that was going to be such a key area. I was really looking for a move up in here, but the confluence between that and the 127% extension of this really took the market. And the only concern that I did have, a little bit of concern I had yesterday in regards to the dollar peso, was that the dollar was open to paring back. I'm not sure how much it would pare back, but I thought that might keep it a little bit under defensive. And sure enough, it has. But this is a good area here. This one even was good here, but look at all this, all the little volume here. Look, you come up, test, come here, battle zone, come up here, pull back. So this is a good volume area right here. I just think that any late bulls that really tested them and probably knocked them out of the box. And now this is a good area for the market to go and try and make a stand here. We'll see what happens, but a good volume area for support, I would believe. And this would also coincide with the cash dollar coming down to 96.92 here. Aussie Yen made it up here. We were looking for us to continue to advance and challenge this level here, but as the S&Ps got stronger, boy, certainly wasn't going to look like that was going to be a great area to sell after all. And you can see here. So I was thinking that we were going to go higher. Remember, we talked about that we had come down here and defended. This was key daily support here, and I had it as my level as we were coming into, I think it was last Thursday. You can see the 77.75. We addressed that yesterday, and that happened to come in on Friday, actually in the I think it was a European session or early European. So we saw a smart rebound. I thought this would be a good area, but when the S&Ps responded very, very nicely, well, obviously the momentum had changed, and you have to go with that. And so how much further can we push? Well, the 78.87 is a pretty good level here, but we'll do some work and we'll see how that plays itself out. But the smart rebound in the S&P certainly opened the door for this to move higher, no doubt. Aussie dollar continues to respond nicely also. And the dollar yen, I like this area, this 1144. I was looking to go on and sell that. I pulled it late yesterday because I don't like to have anything overnight, because my always concern is always to wake up and then be, smacked around. But this is a good area here, this 1144. I'll probably give it the chance to see how the S&P reacts today. I really wish I would have preferred us move a little bit higher, maybe move into just above the 50s, but we'll see how this plays out. But I think this is still a very, very good area here in the dollars yen, this 1144. But we'll get to that. So let's go on and move into the news, and then we'll jump into the analysis. So, barring last-minute surprises, the UK Parliament will finally take a potentially decisive vote on Theresa May's Brexit deal tonight, following last-minute tweaks agreed in Strasbourg. What is on the offer? Notably, a dispute arbitration mechanism and a reassurance on the temporary nature of the backstop, which May insist is legally binding, fall way short of Brexiteers' demands. That said, we can buy the war of attrition with Prime Minister and cowed by threats that their Brexit may not happen at all. Some may decide it is best that they are going to let. The crucial will be the judgment of the Northern Irish DUP party, the revised legal opinion of the Attorney General Geoffrey Cox, and the lawmakers of the pro-Brexit European Research Group. all that is due before the vote around 1900 GMT, assuming that May does not actually win. The next question is now how successful she has been in chipping away at the 230-seat defeat she suffered in January. If she can get that down to single figures, it might encourage her to have a final go. And let's move on to the markets. The breakthrough or bluff. Sterling's 1.5% gain against the dollar over the past 24 hours, and its rise to a new two-year high versus the euro now hinges on whether May's night's last gas series of assurances and declarations from both UK and European Union leaders surrounding the negotiated Brexit withdrawal agreement is enough to get the deal through the UK Parliament on Tuesday. The pound was about half a cent off its best overnight levels of 32.88. First thing, UK PMA and EU Commissioner Chief Juncker in Strasbourg late Monday outlined what they claim was a legally binding addition to the withdrawal agreement and attached statements aimed at assuring UK lawmakers that provisions aimed at preventing a hard border in Ireland after Brexit would effectively lock the country into a customs union with the EU indefinitely. The mixed response from opposition parties and pro-Brexit groupings within the Parliament overnight prompted some market caution. UK first thing Tuesday, something could swing the vote, scheduled for around 1900 London time. Either way, sterling's buoyancy reflects the possibility that at last no deal crush fears will be put to rest and some degree of planning and predictability can return to the wider UK economy. This has been the central scenario for the investment houses for several weeks. However, and sterling short positions have been unwinding since the start of the year. We covered that story yesterday. Remember how we were saying that those short bets have been unwinding further and further and further, and obviously we saw a great impact yesterday. The impact on wider European and global stock and bond markets of a breakthrough is also significant positive. It removes one considerable uncertainty undermining the regional economy, aided by easier monetary signals from the world's major central banks. Over the past week, stock markets have pushed higher on the Brexit optimism. Wall Street stocks added more than 1% last night, with Shanghai, Hong Kong, and Tokyo benchmarks up more than 1% earlier too. European stocks are expected to add at least another 0.5% to the open, and U.S. stock futures are in the positive territory. The dollar index was lower for the third straight day, although the greenback gained against the ebbing safe haven yen. And today we have French Q4 payrolls, UK manufacturing, construction, and trade balance. Let's see. Also, we have CPI inflation, which will move the market a bit here. And on to the Canadian dollar, firms with oil, but worries on domestic outlook. Look, the dollar CAD has hung on very well in light of what we've seen here with oil, so we'll see how this plays out for the rest of the day. The market is still looking at the data and is fearful of signs of further weakness, said Mark Chandler, head of Canadian fixed income and currency strategist at RBC Capital. Oil is at the very least is one of the few things that hasn't added to the pessimism. And on to the Australian dollar, forlorn as pound relives halcyon pre-Brexit days. The Australian dollar was left lagging on Tuesday as sterling made the run amid hopes that progress might finally be made on Brexit, lifting the pound to heights last seen in mid-2016. The time that it jumped as Prime Minister May won binding assurances from EU on the thorny problems of the Northern Ireland border, which might get her a long-stalled leaving deal to pass Parliament. If the Commons accept the Brexit deal, sterling should appreciate by between 4.5% and 5% against major currencies, said CBA analyst Joseph Carpuso. A vote to leave without a deal would see the pound die between 4% and 8%. He estimated, though this seemed an unlikely outcome given the majority of MPs were against a hard exit. And let's move on. Finally, sterling soars after the UK secures assurances. Sterling added more than 3 cents on Monday lows at one point as traders bet that May would eventually secure the support of skeptical colleagues. Britain's parliament voted down May's deal by a record 230 votes in January. Having lost the first vote by a margin of 230, approval of the withdrawal deal would be a huge surprise tonight and would send cable to 135. Elevated levels of short-term volatility suggest it's possible, though perhaps not likely. Markets elsewhere were quiet as investors awaited the next clues about the state of the United States economy, with February inflation figures due at 12:30 GMT. And I wonder when that, as I mentioned, when the vote takes place. I think they said 1900 at 7. Just wondering, I'll have to get with later on what time that translates here in the States. Let's go and move into the analysis, though. And that is a concern. Let's go on and move into into the euro. Well, we certainly made this move above this 1260 here. That's a key daily resistance here, and there was our resistance at 1269. We'll continue to move higher here with the euro. Well, the next key area right here is coming into this 1291 here. Now that's on the daily close. We did, we couldn't take it out yesterday, 1260, but we made a stab at it. We were talking about yesterday there being resistance here or a key daily close. We were looking, I think, at the time of 1269. We pushed beyond here. We're still in sell mode here with the euro. 1291 is a fairly key level. Let's take a look at where we stand here on the 2-hour. You can see we're finally starting to get some nice momentum here with the euro. This is going to be the key area right here, and has been. You see that right there? It's going to be 1312. That'll be a resistance for today, 1312. Looking for support. Well, things have changed, and we know that 1260 is key on the daily. But support's going to come in right there. Initially, you got 1242 and a little bit lower. I don't know that we'd fall that far back here into the 30s, especially the way things have turned around. So support's going to come in right there at 12, right there, 1242, 1242. We saw quite the turnaround here in cable. One of the things that we noted about yesterday, remember we said we're still in a buy mode and we were just testing this 2987, which was the breakout area. I mean, remember at the time, this is when we were looking on the 2-hour at the time, and that was the real breakout area here. And we came back and tested that. And remember, 2979 was the 38% here. And boy, did we see a smashing rebound, to say the very least. The key level that's important here is 3273. And we're talking about this in Asia, because look at this big daily level. That is huge here. We got up and challenged that 78% here on cable. This is huge here, the 3273. But, going with this vote, I mean, God, these things are going to change so quickly. If, like they said, they do not expect there to be for that to pass. If it were to pass, we're going to 136 here. And that would confluence with 3614 being the 61% of 2377, all the way back up to 143.78. But barring some unforeseen circumstance like that, the key is going to be if we can close above 3273. Well, that may not even seem like much of a hurdle if we do, if the votes are a little bit more friendlier, or a little bit friendlier for May, then we'll probably want to even push beyond that. But 3273 is going to be key on the close. Where is resistance going to go in and be? Well, for right now, we're going to call it right there, 33.27. It's actually 33.77. Trying to get a little bit better fix on this. Right there. Yeah, 33.77. And really, I'm just trying to count for the volatility. Actually, going to put it like this. And we made that run right there at 78%. Let's take a look here. $33.53. They're almost basically knocking heads right there. Let's just go right here. 33.53. As far as support, initially speaking, it's going to be right there, 31. You'll be looking right there at 31.58, but may just come just a little bit lower, which is going to be right there, 31.52. Let's go move into the Aussie now. We'll go moving up a little bit higher. I think that the resistance didn't even come in till about, I believe it was, we had it listed as 70, if I remember correctly, at around 70.90. One moment. Yeah, 70.91. There it is, 70.91. I don't see any changes here with the Aussie with that 70.91. You would thought that the Aussie might have fared a little bit better in light of where we stand here with the way the equities have responded. So it's a bit disappointing here, to be quite honest with you. So 70.91 is going to stay just in place. We're trading in a relatively tight range. I think people still expect the Aussie then probably not to fare too well, even if we get obviously in the long run, just like what Blake was saying, is that if we do get the deal come out with China, it's still going to be a world of hurt for the Australian economy overall. So that's no changes there with the Aussie then on that as far as resistance and support is going to be stay relatively the same here. Dow 70.25. We kept it pretty tight, and I think that makes sense then. That'd be about 50 pips away. So obviously still bearish. No change here in the Aussie whatsoever. And let's go move into the dollar Swissy. Hang on 1 second if you don't mind. Be 1 second. Okay, let's go and take a look. Here we are with the Aussie. I mean, sorry, the dollar Swiss. Still hold up relatively strong here with the dollar Swiss. A bit surprised. I mean, even though the dollar's pared back a bit, not seeing much of a diminishment here with the Swissy. Let's go and move into the 2-hour chart. The resistance or the support I'm going to show here is going to come here at par 54. We still need to drop a little bit further, and sometimes the Swissy will hang around for a little while, and then it may even hang on for 2 days or so, and then all of a sudden it just slides back, and that's going to come in right there at par 54. And actually we have the 38% at par 49, 48 and a half. Let's just call that par 48 if we do go on to see that slide. But nice little support band here coming in at par 59. I think we could still pare back a little bit further if we do see a little bit further more dollar weakness, but we're going to play it on the safe side and say par 48. You actually got it right here. It's coming here almost at par 58. So that little 10 pip range, but we'll call it par 48 for the support. That's the 38% back. As far as resistance, this thing is very resilient. You think about it. I mean, it's holding up very, very well in light of with the dollar pulling back. We'll go with resistance right there at 0103. 0103 coming in right across. Dollar CAD still holding up relatively well here, even with the dollar index paring back. Look at that. Challenging this 96, 92 here. Euro pushing up a little bit higher, and still the dollar CAD holding up like a champ. We talked about this. This is that good support area. Any moves down here are going to be, I believe, well defended. We had that as a support here at 33.58. This thing is holding up very, very well. Look at this with crude oil here, 57.32, and we're still not getting much of a pullback. It's amazing. But we'll have the support here we had at 33.58. We saw the 58, we got 33.54 on the daily. 58 was here on the 2-hour chart. Right there, 58. It's amazing how well this is held up. But yeah, that's going to remain the same here with the dollar CAD at 33.58 for support. Resistance, we had at 34.49. Resistance will come in right there now. 34.20. We'll call it 34.30. 34.30. Just tighten it up a bit. From here, we're going to move into the dollar peso. As we talked about earlier, this is a big, big, big daily level here, this 1960, if you look at this. And the market did run out of gas right in here. I thought we might have made a move potentially. The way this thing had taken up, I thought if once we got it going and it did flip, we could really add a bolt here and maybe come up here to the 1970s. But since then, we paired back after we came up to this huge data level. That happened to confluence here with the 127% here, right there. You can see right there at the 127%. That's so I came up with that area here, but this 1960, boy, that was a huge one right here. Let's just go and get rid of this. And let's take a look at the fib on this pullback. Dollar index is coming into some support here. But like I said, crude is making this little run here, so let's continue to add some pressure. 1932.3 would be the 50% back, but that's a pretty good pullback. We've got some nice volume support coming in right in here. The risk right now is to here 19.345. I want to get a little bit of room because of the way crude's responding really very nicely here. So we're going to go with 19,345. We're in a good area though. At this point, I think that the peso is going to have to do its own lifting. And when I say that, I mean as far as the dollar index is coming to a little bit of support. We may make one more last little dip in here, and then we can get a little bit of a rebound. But it feels like it right now, as I think some late bulls got whacked around pretty good. So the market's going to have to make its own defense. So we may just kind of languish just a bit here, and then maybe we can see if we can, the market eventually over a day or two can pull itself up by the bootstraps and try and, work a little bit hard to make this run. I thought we'd breaken out of this, I guess you'd call it a malaise here, as the market was kind of trying to find its own. And once we broke out, this thing looked like it was, on its way for bigger and better things. And it did make a run and really took off, but we came into a key daily level. We'll have to see what the dollar does and also what crude does here. But we may be, after getting beat up, some of these longs, it might be they may want this market to settle and see if it can hold its own before making another upside move here. As far as resistance, well, it's going to be right here at 1945.77. And let's go on and move into crude. Well, I was looking for a move higher here, really just to trip stops. You see here, we're looking for 57.06. Yeah, because remember we've been using 56.48. Oh my God, I would think it was almost all last week, and I was keeping the market in check. But I thought they could trigger stops because the market had held up so well. Amazing. Got 57.29 here. Right there, it's actually key is going to be if we can close above 57.22. That'll be huge if we can close it a bit. I mean, sort of it acts like it wants to push even higher. The short-term resistance for them to go to, it's amazing for me to think that it's continued to hold up here. Would be a run up here to this 57.99. I mean, so we can certainly go in and goose them up a little bit higher. Well, I'm gonna give it the benefit of the doubt and go with 57.98 because this market's got some strength in front of it. Also, the equities certainly help this market. As far as support, well, you know where support's going to be. That was that old area we've been holding for resistance. It's keeping it simple, and that's going to be 56.48 right there. Remember how that would hold the market in check very well. So we'll go 56.48 for support, which had been resistance pretty much all last week and kept the market in check. Let's go and move in now to the dollar yen. You can look at the dollar yen in a couple of ways. Did make it up to 46. I was looking to short 44, but I pulled it from overnight. I don't want to wake up and see this thing up in my grill or something like that. I like to go on and manage my trades a little bit closer because primarily I just scalp or very, very short-term trade. But with this whole Brexit thing, we may be able to keep the equities. That's what I was going to say. You can look at it in one or two different ways also. It's a little bit disappointing if you consider how well equities have rebounded. To still not get very much juice off of this. I would think that the dollar yen probably be trading around 1160, 11, or in the mid, maybe up as high as the mid, like 1164, 1165. So it is a lagging sister on this. But if the Brexit thing comes in a little bit better than expected, then we can push the equities and maybe we'll get a little bit further squeeze. So let's take a look here with the dollar yen. How far can we push up a little bit higher? That's going to be our resistance right there. When that's what I was talking about. You know, I would have expected it to have been much higher, fared better. So obviously it's a weak sister. Here's that 1144 I was talking about. But if we do get a little bit better deal on the Brexit, and the SPOOs have been responding, apparently, you know, to the good news coming out of Britain, out of the UK. So we'll see if they can push them up here. I think this is a very good value area then to look at, which is 64. Maybe we might even be able to push it as high as 70. But we'll call it 11. We'll call it with 1165 for resistance, and then we'll see how the market can react. If it can't hold up, eventually, if the SPOOs turn down, then we'll maybe eventually see some more follow through with dollar yen. This is one of those trades you kind of have to hold, no doubt about that. It's not reacting as quickly as you would have thought. Support is going to go in and come in at 1124. 1124. You can actually make the case right. Yeah, we'll call 1121. 1121. Not a market that's moving very much for right now. Let's go and move into the Aussie Yen. Well, we talked about this last week after defending this 77.75. We saw a smart rebound. One of the things I was concerned about with the Asian analysis was over the weekend was that we had a nice hammer bottom and we're going to see some follow through. And I thought this would be a good area right in here. This 78, if we could push in here to 78.61, that's why I have it there in the pink. But obviously with the equities turning around, we got even further boost. And look, we finally did make it up here just now to the 78.87. We're not too far off of it. I think, like I said, you're going to be looking here at the 61% if we can push a little bit higher right here. And that's 79.02. Let's go and actually mark this off. There we go. So we got a very nice confluence coming across here. Right there. So it's going to be 79.02. We'll see if we can stretch it a little bit higher. And I think that'd be a very good area. Step in. Support is going to come in right there. Let's pull moving to the 2 hour. $78.29 for support. Let's keep moving to the cash dollar index. Well, we talked about this yesterday as we came into the week, and huge level here that it came into. We're nearly just about made it right there. All right, there, 97.89. That actually confluenced with the 61%. So to see this market pull back a bit was expected. I'm not going to say it was expected down here to the 96.92. We actually rebounded off that. But in our buys chart, we were looking for 97.03. I thought that I wasn't even sure if it'd even make it down there, but I thought we'd see some decent demand come in. Well, we did, but dipped a little bit lower, and right there we're now at 97. Looking here on the 2 hour chart. We found that support here at the 96.92 area here. We'll move the support just a little bit lower, but this is actually defending pretty well. So if they want to test it just a bit, it comes at 96.83. 96.83. At least you know where your risk level is here. 96.83. On the upside, right there, 97.35. Right there, 97. Call it 97.35 for today's buys chart. Resistance. Now moving into the gold market, still holding up very, very well. We had, we're talking about potentially we could even move higher. Well, the equities have fared better. So it's kept a little bit of a leash here on gold, but it's still holding up very well. Okay. We had a resistance, we had our buy chart support here yesterday, 1292. And we did make a run here for the 1292-ish area here. You see right there. We'll take a look at here on the 2 hour. So we just made just below 1292, and we've had a nice rebound from that area. We'll keep the 1292. I mean, you can make the case if you're playing it to the upside, but we're just talking about $1.50, a couple dollars. I still like this on the upside, which was support before, is this 1304. So no changes here on the gold. And let's go and move into the buns. Whoa, look here, cable starting to slide back in here. We'll keep it relatively simple. You can see right here, and we did have some bad data yesterday, or weakening data, but the resistance is pretty clear where it's going to come in right here, 66.18. Big change here as we paired back. And things change so quickly with the buns, but I think they can press this market a little bit further. But I think we can make a move down here. Maybe buys early. Well, it could even be today, but I would think by tomorrow. And just a little bit more support at 12. As far as resistance, well, it's pretty clear where the resistance comes in. I don't know if we quite make it right there. We'll go with 66.74. And lastly, let's go on and move into the DAX. Well, smart rebound here in the DAX with the support of the SPOOs. You know, if they get that Brexit thing going, you know, look, we've come back, paired down to 31.84. Resistance, we just have to go with the levels for right now. That's it. So it's going to be 11,649. Support's pretty tight in here. We'll go with 11,484 right there. Keep it somewhere actually. All right there, 11,485. Things gonna bop around here with the whole vote thing. So this will be a day to be just be a little bit careful, exercise some good judgment, and you don't have to force anything. With that, we're going to get the bias chart posted in the room, and thanks for joining us here on the European crossover webinar. Good luck trading.